Welcome back to the Grenadier podcast, Real Estate Uncovered. Today I speak with Paul Garner from Mortgage Life about utilising your equity to grow wealth. You obviously love this business. Tell me what you love the most about it. Today, an absolute exclusive. Welcome back to the Grenadier podcast, Real Estate Uncovered. Well, Paul, could you introduce yourself to us?
I'm Paul Garner and I'm a mortgage broker and director at Mortgage Life.
And how long have you been a mortgage broker for?
So I've been in the finance sector for probably around 9-10 years now, but brokering around 2 years since I sort of left one of the biggest banks in New Zealand and gone out on my own.
Wonderful. Are you enjoying it?
Loving it. Probably the biggest regret is not doing it sooner and just having the full market options available to our clients so that we're getting the best fit for them and not kind of shoehorning them into one option really.
Yes, exactly. So you're selling a variety of products and finding the best fit for your clients.
Yeah, finding the exact fit rather than kind of making things work.
It fit.
Yeah, absolutely.
Oh, it sounds quite liberating then.
Yeah, it's been an eye opener, and it's quite amazing what's actually out there when you're not limited to one provider, and just there's so many different options out there for clients, and it's really competitive for your business these days.
I think that is so great for the consumer because often consumers have been with their one trading bank their whole life, and to be able to really have their eyes open to people wanting your business and what they're prepared to do to get it and how they're going to help you is great.
Absolutely. And I think it's more getting that support early as well.
Yes.
I think historically people have got a lot of support from financial providers when things are going good, rather than at the starting point when they're just getting on maybe their first investment or starting a business, where it's so key for them, and getting that support to then get out the other side and work with them along the way. And I think that's often overlooked, and it's a bit of a power shift, I think, back to the client and the consumer, if you put it that way, where they have options, and you know the loyalty isn't probably what it used to be.
Yeah. I know you start with your savings bank as a child and you think, if I'm with them for 20 years, they'll look after me. But all those things are out the window now.
100%. Yeah, it's amazing. I'd probably hear that a couple of times a week that I've had my account for 25 years. So, the Kiwis are loyal, but we need to make sure that they're not loyal at the detriment of their overall position or achieving their goals, really.
Exactly. And I think, meeting with someone like yourself, it just opens people's eyes, doesn't it?
100% to what's actually achievable when you have a goal and you set out and you're disciplined about what you want to achieve. There really is kind of no limitations on it, especially if you're willing to work for it.
Absolutely. So what we'd really like to unpack today is buying your first investment property and utilising your own home to obviously attain that. Tell us how that works. Yeah,
so it's actually quite straightforward. So the first step would obviously be reach out to a good broker or a good banker if you're fortunate enough to have one. What I would say is on that front, when you're dealing with a broker, you've got the market options. So you've got not a one size fits all. So with the bank, there'll be options direct, but it will only be what they can offer. So different banks scale rental income differently. They factor in insurance and rates, which can affect servicing. So in using a broker, you've got all those options, and you've got the broker to kind of work through what the best fit is for you. And if you still want to go to that existing provider, it's still available, so you don't have to shift your banking. But it often starts around a simple conversation or a meeting around, so how long have you been in your home? What's your house worth? And from there we can kind of work out, well, my home's worth 500,000. The maximum that the bank can extend is 80% historically.
Yes.
And then we'll ask a bit around, what's your mortgage? 200K, I've been working pretty hard and I've been a good saver. So the calculation is basically extension value minus lending. So in that example, 200,000 equity, which when we look at practicality-wise, that's usable, tangible equity to repurpose for an investment. So if we're looking at on the application side, that may give you scope to go buy something at 650,000 purchase price.
Yes.
And gearing that investment up to full 100% lending. Now, that's the first tick. The
Yes.
second part is obviously the servicing and
Servicing.
making sure we can include, service our existing lending, but also the new lending, factoring in rental income and so forth.
Yeah. And so for people looking to buy a property as an investment, firstly, they come and talk to you and say, based on my equity in my current home, what can I lend?
Yep.
And then you'll give them some idea around the repayments, and obviously they need to factor in rates and insurance and some other costs.
Absolutely, yeah. So we'd also probably dive a bit deeper and just get an understanding of maybe the clients, what they're wanting to achieve firstly. And also I like to dig a bit deeper and ask around, risk profiles and bits and pieces to make sure that it's the right play for them.
Yes.
If, you're worried about the hot water cylinder breaking in the middle of the night or a bit of tenant damage, maybe not the play for you. So getting an overview, but it's also really important to understand, is it just going to be one or is it going to be 2 or 10, and how we structure things to build towards that. And work towards that goal.
What are some of the misconceptions, I guess, of that you come across when you meet with clients?
Yeah, the key one's probably the total equity side of things, where someone may, throw out a figure, I've got 300K of equity, and yes, you do. If you sold the property tomorrow and you recoup the amount minus lending, you've got 300K, but the banks only have limitations on what they can lend, which is those LVR restrictions.
Yes.
So understanding that's a key one. I think historically, if you go back, and this is a bit before my day, but my parents, I remember them talking about it, was the GFC days where you could have a strong asset base and the bank would be willing to lend to you based on sort of an asset lend rather than the servicing side of things.
Yes.
And it's a bit of a shell shock if you've recently gone through an application, probably inside the last couple of years versus to maybe 10 years ago, and how quickly it's changed, where servicing is a key component.
And do you think a lot of that's down to that financial responsibility and lending and all those kind of criteria?
Yeah, there is. And I think if you've had it a certain way for a number of years and then it's changed, people don't like change. And there's some good reasons why the changes have come in. But again, I don't think it's limiting at all. I think it's just more, there's a few questions that we have to ask up front, and we really need to get to the bottom that people can service things for the short and long term. Yeah.
Yes. And I mean, in recent times, we've seen interest rates rise quite rapidly. And if you hadn't been stress tested at those levels, or you hadn't thought about, wow, can I service a mortgage if the rent's not growing as fast as the interest rates are growing, then you could have left people vulnerable. So it's there for good protection, right?
Absolutely. And I think on that front, there's an element from us as advisors to make sure that the structure is put in place, that you're limited from those interest rate fluctuations. If we look at where rates were pre-peak, around the 2s, which seems so long ago, but it wasn't that far, and to where they got around the late 6s, if not 7s. A lot of people were just fixing for 1 year or 2 years at best, and they really got burnt when we came off those low interest rates into the highs. So I think there's an element of, there's some lessons to be learned, but also it's important to get that advice early.
In terms of people, then they come and they get pre-approved perhaps to a certain amount that they can go and spend in the marketplace. Is there parameters on what that, in terms of the servicing, they'd know what sort of rent they'd need to attract for that property in order for it to meet the bank's criteria, both equity-wise and serviceability? Yeah,
so I think the initial, in the overview, we're looking at making sure that it stacks up as an investment for that person. So often working out, is the property that we're looking at more of a capital growth play, or is it going to be a yield play where it may be not in as much of a desirable location, but it's going to rent well, and it's going to help prop up the portfolio that I'm trying to build. In terms of initial repayments, we can look at that up front, so you know what you're getting into. So if you're getting $550 a week rent, we know that's going to line up with what your repayments are going to be. Other levers we can put in there is around interest only, maybe, to make sure that those repayments are a bit lower.
Yeah.
And then you make manual adjustments at the end of the year when you've got that surplus cash. There's a whole array of ways to do it, but I think it's getting a good overview and understanding there's no surprises when we get into this. We know what we're getting into, and it's a marathon, it's not a sprint, so it's the longer term approach to things.
Yeah, absolutely. In terms of them managing their own properties versus getting a property manager, do you have some advice around that?
Yes, yeah. Get a property manager.
Get a Grenadier
yeah,
one.
Yes, yeah. I can vouch for the girls at the rent shop. They're fantastic.
Amazing.
And I think that's a key component with the
Yeah.
people you're working around as well. Quite a few clients say, I figured I even have a rental property because they just don't, years go by and they don't really hear too much about it.
Yeah.
And I think if you can take a lot of the white noise out of the transaction as well, all investments have risks, but if you've got someone that's handling the day-to-day operation, and let's keep in mind that they are the experts, they do it on the daily, they manage hundreds of properties, so but full credit to you if you want to take that on and do your inspections in line with keeping the insurance companies happy and bits and pieces. Full credit, but I know personally I'd be outsourcing that. I'm terrible with paperwork.
And I think the great thing about property managers is they will do those annual reviews with your tenants. They'll know, what rent they can increase it to that's prudent.
Yep.
But sometimes mum and dad landlords let people get away with their sob stories and their, suddenly there's an animal that you didn't agree to, and suddenly, there's an extra person living there you didn't know about. So
exactly.
treat it as an investment and do it in a professional manner.
Yeah, and they're doing the pre-checks, the reference checks, keeping you, compliant when it comes to insurance and other bits and pieces. So yeah, I think we hear some stories which work out well for people, and then others where exactly what you've said, they've allowed a wee sob story and it hasn't worked out well, which we want to avoid. Yeah.
With your people that you've had buy investment properties and use their equity, can you give us perhaps a success story or something that's a great case study?
Yep, absolutely. One that springs to mind actually, I personally thought, oh wow, that's really impressive. So as a client that's based overseas, so they New Zealand residents, but they're based overseas and they have a decent rental portfolio. And when they reached out, we got them pre-approved to go shopping. And I thought, oh, they must be popping back to inspect a couple of properties and go about it. And the more I talked to them, they're like, yeah, we've got it all lined up. And I got to the bottom of it, and they had an amazing property manager, a fantastic agent that they were working alongside, good accountant, lawyer, they all had their part to play. So the rental manager knew exactly what it was going to yield. The agent knew, permanent materials. There's not going to be any ongoing maintenance. It's healthy homes. They had their own metrics of what they wanted to yield in the right areas. And so they had all these people around them to achieve the common goal. And they could do that remotely without any limitations, thousands of kilometres away. And I just thought it was really powerful that, when we think about sometimes some excuses not to do things, these guys were doing it, and no barrier. And it was
offshore.
a very offshore. Yeah, amazing, really.
And great that they're investing in New Zealand and providing accommodation to
Absolutely.
Kiwis.
And then for their kids and future generations, they've got that they're coming back to New Zealand at the right time, but their kids are going to be better off for it, and they're going to have a amazing retirement.
Yeah. When people think about using their own home as equity, a lot of fears can come up.
Mm-hmm.
And I know when we bought our first rental, my biggest fear was finding the right tenants.
Yes.
So I thought, well, I'm not going to let that stop me. And we had some friends that needed to rent a property. So we all went shopping together and bought them a home. And that's how we got started.
Yeah, that's fantastic. Sorry, yeah.
And that got me over my fear.
Yeah, it'd be a bit awkward if they turned out to be ratbag tenants. But yeah, great story.
Paul, tell us your best piece of advice when people are thinking about getting started on this journey.
I think the best piece of advice would be to be a bit vulnerable, reach out, have the conversation. It's amazing how many people can actually achieve buying an investment or even just what's available to them right now. So a lot of the people we're talking with, they thought they were years off, and they weren't. They could do it tomorrow in some aspects. And those that maybe are early into their their first home, they've owned it a couple of years. Don't write it out if it's something that you're passionate about. It may mean that we can't do it tomorrow, but we might be able to do it in 6 or 12 months, or even just thinking bigger abroad. It might not be in Christchurch, it might be in a different region, and there's no barriers. So have the conversation. Don't be worried about, previous declines or interactions with the banks. We're here to support you, and we can guarantee you we won't be complaining about your spending if you've gone and had a couple of vinos at the weekend. So yeah, we do it on the daily. It's what we're good at. So be vulnerable and have the conversation if it's something you want to achieve.
Absolutely. Nothing ventured, nothing gained, right?
Exactly, yeah.
And even if, like you said, it's not today, you might say, hey, if you do A, B, and C, let's look at it in 6 months' time. And it gives people direction and focus.
It's the roadmap to getting to what you want to achieve, and actually being informed on it, not just going in with the blinkers on, not knowing that, maybe I can, maybe I can't. You've got a detailed a breakdown.
The other thing I'm thinking of as I'm talking to you is that potentially some people might buy their first home and then decide to keep that as a rental and buy their next home. Does that happen very often?
All the time.
Okay,
yeah, all the time.
perfect.
Yeah. So when we look at a first home purchase, it's not the forever home. I'm yet to meet someone that buys a $1.5 million home first up.
Yes.
It's that first property that may need a bit of work, but would be probably an ideal rental property because it's at the entry level of the market.
Yes.
So we see that constantly, and people may look at doing a top-up or equity release against that property and split bank elsewhere.
Yes.
So it's really common. Yeah, it's probably 80% of how people get started, really.
Yeah, because I'm feeling like that could be maybe a more comfortable option for them. They know that property. They want to, move to the next level and utilise that property to
Absolutely.
carry on.
And they've lived in it. They know what's wrong with it, maybe, or what's right with it.
And what's great about it.
Yeah, and if it's good enough for you, it's obviously probably good enough for the tenant, and as long as it's with the standards, it's perfect option.
So I guess the most important thing people should take away from today is talk to an advisor, get started on your journey, plan for your future, because it comes around pretty quick.
Absolutely. Yeah. Get in touch today.
Great. Thanks, Paul, so much.
Thanks for having us.
Thank you so much for tuning into the Grenadier podcast. We hope you've enjoyed the show. Please give us 5 stars. We'd really appreciate it.